Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Friday, March 7th, 2010. Wow, what a day yesterday was. We're talking about recipe for disaster. Unfortunately, I picked that day to be out of the office and was actually following the market action from home in shock and disbelief of what was going on. I've mentioned the risk that's in the marketplace right now. We all know about what's going on with the Eurozone. If you watch television, you've seen these Greek riots. We all know what's happening there. But the action that we saw yesterday was basically it was the perfect storm for what can happen when markets don't function properly and they can collapse, and that's what we saw yesterday. The Dow Jones Industrial Average dropped roughly 800 points in less than 10 minutes, and this was due largely in part to some technical glitches which occurred that caused stocks to trade at prices that were way lower than they should have been, which in turn helped take the overall average down. So once they got that corrected, the market came back. It was still down big yesterday, but this occurred right as we have all this fear going on in the Eurozone of what's happening. Yesterday, they didn't know that today German Parliament was going to approve the Greek bailout. That's happened. That's given the euro a little bit of a bounce this morning from its losses from yesterday, but it's still under 127 versus the euro. Versus the dollar. Let's take a quick look at this. We're going to look at 30-minute charts because I want to get the action in from yesterday. As you can see here, it was a slow decline, and then boom, the crescendo happened right around here when the stock market began to tank. And because of the correlations that happen with the markets, it's sort of like the stock market goes down, dollar goes up, everybody runs to the flight of safety of the dollar. It means they sell everything else, and that just exacerbates the problem. So as you can see here, euro almost gets to 125, which would be a low that we haven't seen since I believe 2008. Let me see if I can go back here on the chart. Let's take a look here. 2 years. Yeah, 2008 was the last time we saw it this low. So as you can see here, we're coming back to that support. It looks like we're still in a downtrend. They really need to do something over in the Eurozone about the problems here. This Greek bailout's one thing, but we've talked about Greece as a microcosm for the overall structural problems that they have in the euro to begin with. Now everyone's talking about Spain. That's the next big disaster potentially waiting to happen, and we're going to have to see how they handle the situation, but they definitely need to do something. So the other thing we had happen yesterday was you had the UK elections we talked about. Well, they did get hung parliament, which people were hoping to avoid. Nevertheless, Moody's did reaffirm the UK's credit ratings, citing facts that the hung parliament may not be that bad, and that these guys actually may work with each other. Now, on top of that, we had this morning's non-farm payrolls report here in the U.S., which normally this is the biggest market mover that we'll see, but due to the unprecedented risk in the market and the moves that we saw yesterday, this has actually taken a little bit of a back seat. But non-farm payrolls showed a gain of 290,000 jobs, but the unemployment rate actually ticked higher to 9.9%. So a little bit conflicting there, showing that economic recovery is still fragile here in the U.S. Canada, they had their unemployment report, the job gains of 108,000, and their unemployment rate actually ticked down to 8.1%. So they're doing a little bit better up north in Canada. And then lastly, we're seeing the yen is much lower this morning. Okay, the Bank of Japan pumped nearly $22 billion of liquidity into the market in response to this euro crisis. Basically, what happened is that once the risk themes were established and everybody was running for the door, they were trying to unwind their carry trade. So they were doing things like selling Aussie yen. We can take a look at Aussie yen from yesterday. Let's look at this on a 30-minute chart as well. And you can see right here, just a tremendous move down. So in order to facilitate that, they put more liquidity in the market so that demand for yen can that they'll have money to meet it, basically, so that you don't see moves like that occur going forward. So the yen's lower today, but if you look at the market, you might just look at it in passing and say, oh, today's sort of a risk appetite day, and that couldn't be further from the truth. I think what we're seeing here is we're seeing short covering Okay, a lot of people were short these things. I don't necessarily know that this would be the place I'd be looking to establish long positions, especially until this Eurozone news blows over. And it's always tough to do. I mean, yes, there are sometimes bargains out there, but if you're trading these markets in this environment, you need to be very careful what you're doing. And frankly, I tend to sit these market moves out because when things go haywire, you never know what can happen, and it's difficult to trade. I mean, I prefer to have more orderly markets, so that way you know exactly what you're getting into and what you're doing. So if you are going to trade, I would say only use risk capital that you're prepared to completely lose, because in situations like this can happen. So that's what we're seeing in the market. We're seeing a bounce back. Euro's bounced back against yen as well. It's up higher today. It's partly yen weakness, partly a little bit of euro strength. Like I said, German parliament approved the bailout, but they still have some work to do over there. So that's what's happening in the market. There's major risk out there. So I was talking about it on Wednesday. Selling may go away. I mean, I hope some people did that. That would have been, you would have been out of that move, wouldn't have had to worry about it. But as you can see, markets are going to continue to be volatile for some time until they can get all of these situations prepared. So that's what we have this weekend. Frankly, I don't know if I'd be taking anything long into the weekend because who knows what's going to happen come Monday. So if you're trading, good luck to you, and I hope you have a nice weekend.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.